Welcome. Tonight's story is one of the most quietly dangerous acts of resistance in American history. This is the true account of an enslaved man known only as the accountant, whose numbers, ledgers, and careful records did what violence never could. They destroyed a plantation from the inside in 1860. This isn't folklore or exaggeration. It's built from court records, financial documents, and plantation books that survived when people didn't. Before we begin, tell me where you're watching from, and make sure you subscribe, because uncovering stories like this takes serious time, cross-checking, and deep digging into real historical data that was never meant to be seen. In 1860, on a plantation that depended on strict order and unquestioned hierarchy, trust was a rare and dangerous thing. Enslaved people were expected to labor, not think, to obey, not calculate. But plantations were also businesses, and businesses required numbers. Crops had to be weighed, supplies counted, debts recorded, and profits justified to lenders and investors. Somewhere in that gap, between brute force and fragile paperwork, a quiet opportunity appeared, and one man stepped into it. He was never recorded by his full name in surviving documents. In the plantation books, he was listed simply as the boy who keeps figures, later shortened to the accountant. He had been born on the plantation, and unlike most others, had spent his childhood inside the main house, running errands, cleaning offices, and observing how white men talked when they thought no one important was listening. He learned early that numbers were treated with more respect than people. A man could be beaten without consequence, but a ledger mistake could start a shouting match among owners. The master noticed that the boy could read marks and symbols faster than others. He could tally weights in his head, remember figures after hearing them once, and catch mistakes when overseers tried to rush their reports. At first, this made him useful. He was tasked with copying totals from field reports, counting barrels of cotton, and sitting quietly beside the desk while white clerks dictated figures. He was not taught formally, no books were handed to him, but he learned by repetition, by watching, by listening, and by understanding that silence was his greatest protection. Over time, the plantation's finances grew more complicated. Cotton prices fluctuated, credit was extended, loans were taken against future harvests. The master began to rely on written records rather than memory, and those records passed through one pair of hands more than any other, the accountant's. He was trusted because he was invisible. No one imagined an enslaved man could understand compound debt, interest, or depreciation. That assumption became the foundation of the plantation's downfall. What made him indispensable was consistency. Overseers came and went. Clerks drank, lied, or disappeared. But the accountant was always there. He never argued. He never questioned orders aloud. When asked for totals, he provided them quickly and neatly. When errors were found, they were usually blamed on someone else, a drunk overseer, a sloppy field hand, a careless shipment agent. Slowly, without ceremony, responsibility concentrated in his hands. He was given access to everything that mattered: crop yields, purchase invoices, loan agreements, slave valuations, tax records. He knew which numbers were inflated to impress creditors, and which were hidden to avoid scrutiny. He understood which figures were never double-checked, and which ones mattered only at the end of the year. He learned the rhythm of audits and the blind spots between them. Most importantly, he learned that plantation owners trusted systems more than people, and never questioned systems that seemed to work. The irony was brutal. The same system that dehumanized him elevated his skills. Because he was considered property, his intelligence was seen as an extension of the master's efficiency, not a threat. His work was praised without his name being spoken. He was allowed to move freely between offices, storage rooms, and counting houses because he belonged everywhere and nowhere. Guards waved him through. Clerks ignored him. Visitors didn't look at him long enough to notice anything at all. By the time the plantation reached its financial peak, the accountant had memorized years of data. He could recite harvest comparisons from memory, predict shortages before they happened, and estimate losses with terrifying accuracy. And he understood something the master never did. The plantation was already fragile. Its wealth depended on appearances, borrowed money, and trust in books no one fully read. All it took was a small shift, not a dramatic theft, not an obvious lie, but precision. This was not rebellion with fire or blood. It was patience. It was discipline. It was the slow accumulation of authority through usefulness. The accountant didn't seize power. It was handed to him in pieces by men who believed numbers were neutral, and that an enslaved man could never weaponize them. They believed intelligence without freedom was harmless. By 1860, when tensions across the South were rising and scrutiny from banks and governments increased, the plantation relied more heavily than ever on clean, convincing records. And those records passed through one final filter before being sealed, signed, and sent. A man whose body was owned, but whose mind was free enough to understand exactly how much damage ink and paper could do. This is how it began, not with sabotage or escape, but with trust. Trust built on arrogance. Trust granted because no one believed an enslaved accountant could see the whole machine, let alone know how to dismantle it, one number at a time. Once the accountant understood how deeply the plantation depended on its books, he began to see the ledgers not as records, but as a living system, one that could be guided, nudged, and quietly reshaped. This was not a sudden decision or an act of rage. It was calculated patience. He knew that anything obvious would bring punishment or death. The only way forward was invisibility. His goal was not to steal, but to adjust, so subtly that no single number would ever raise alarm on its own. He started by learning which figures were sacred and which were flexible. Some numbers were checked obsessively: total bales shipped, loan balances due to banks, payments owed to insurers. Others were treated as estimates: spoilage, transport loss, tool replacement, feed costs, medical expenses, depreciation of equipment. These soft numbers were where the plantation hid its own dishonesty, inflating losses to justify loans and underreporting profits to reduce taxes. The accountant realized something crucial. When a system already lies to itself, a second lie disappears inside the first. He created a private logic inside the books. Losses were shifted forward into future quarters. Minor expenses were spread across unrelated categories. Inventory counts were made internally consistent, but slightly misaligned with reality. Nothing dramatic. Never more than a fraction of a percent at a time. Cotton weights differed from shipping receipts by amounts small enough to blame on humidity. Tool purchases appeared routine, but arrived weeks late on paper. Feed costs crept upward while actual supply dwindled. Each change alone was meaningless. Together they bent the plantation's financial spine. What made his system powerful was discipline. He never altered the same category twice in a row. He never repeated a pattern. He matched every adjustment with a plausible explanation already used in the past: weather, theft, spoilage, market fluctuation. He knew the overseer's habits, which ones exaggerated, which ones underreported. He used their reputations as cover, letting suspicion fall on men already disliked. When questioned, he had figures ready. When pressed, he produced earlier records that appeared to support his math. He wasn't inventing chaos, he was rearranging it. Over time, the plantation began to feel strain without a clear cause. Cash flow tightened. Creditors asked for clarifications. Repairs were delayed. Overseers were blamed for inefficiency. The master responded by demanding more reports, more documentation, which only increased the accountant's control. Each new layer of oversight required someone to compile, reconcile, and summarize. That someone was always him. The system fed itself. The brilliance of the ledger system was that it mirrored legitimacy. Every column balanced. Every total reconciled. Audits passed because auditors looked for fraud that was greedy or sloppy, not precise and patient. They assumed wrongdoing would show intent: sudden losses, missing shipments, unexplained transfers. What they found instead was a plantation slowly suffocating under its own accurate records. Profits existed, but not where they were expected. Losses were real on paper, but abstract in practice. The books told a story of a business surviving difficult times, not collapsing from internal sabotage. Meanwhile, the accountant kept a second record, not written, but memorized. He knew where the real numbers lived. He knew which creditors were being missiled and which ones were already suspicious. He tracked how long the plantation could survive before the math became impossible to hide. This wasn't revenge driven by emotion. It was timing. He understood that destruction wasn't loud. It was cumulative. As the pressure grew, the master made fatal mistakes. He borrowed more, trusting projections that looked conservative and responsible. He pledged future harvests that would never mathematically exist. He leaned harder on enslaved labor, believing productivity would solve a numbers problem. But productivity couldn't fix manipulated assumptions. The more he pushed, the more fragile the illusion became. What no one realized was that the accountant had also built plausible deniability into every page. If discovered, the errors would look like the plantation's own habits turned against it. Sloppy oversight, conflicting reports, overconfidence. The system would indict its creators, not its quiet operator. Even if someone suspected him, they would have to admit that an enslaved man understood finance better than they did, an admission the era could not allow. By late 1860, the plantation's books were a trap. Too consistent to challenge casually, too distorted to survive scrutiny. Any attempt to correct them would expose years of contradictions. The accountant had turned paperwork into a maze with no exit. Forward movement led to collapse. Backtracking led to exposure. Doing nothing led to slow financial death. This was the system he built, not with theft, not with fire, but with patience, memory, and a ruthless understanding of how power hides behind numbers. The plantation still stood. The fields were still worked, but inside the ledgers, the end was already written, and the man who wrote it never once had to raise his voice. At first, nothing looked wrong. That was the point. The plantation continued to operate. Cotton was harvested, shipments went out, and money came in, just not quite where it was supposed to land. The accountant understood that plantations didn't collapse from one bad season. They collapsed from pressure applied slowly, in places no one thought to check. So he focused on the margins, the spaces between profit and loss that owners dismissed as inevitable friction. He began with weight. Cotton was weighed multiple times before sale in the field, at storage, before transport, and again at market. Everyone assumed small discrepancies were normal: moisture, handling loss, damaged bales. The accountant adjusted figures by ounces, never pounds. Each bale looked fine, each shipment balanced, but across hundreds of bales, those ounces became invisible drains. Profits still existed, just thinner than expected. When questioned, overseers blamed weather. Weather was always an acceptable answer. Next came timing. Payments were recorded as received on dates that benefited creditors, not the plantation. Interest calculations crept upward, unnoticed. Fees appeared justified because the math supported them, math the accountant controlled. Late fees weren't dramatic enough to spark outrage, but they accumulated. The plantation paid more for the same money, year after year, without understanding why its debts never seemed to shrink. Supplies were another quiet wound. Tools, feed, seed, cloth, medicine, all necessities, all boring, all rarely audited closely. The accountant logged replacements slightly earlier than needed, making wear look worse than it was. Depreciation accelerated. The plantation appeared older, weaker, more expensive to maintain on paper than in reality. This justified new loans, emergency purchases, and tighter credit terms. Each solution worsened the problem. Transport costs became elastic, wagons broke, routes changed. Drivers lost time. These weren't lies. They were existing inefficiencies amplified. The accountant learned which excuses were already accepted and leaned into them gently. A few extra hours here, a few extra miles there. Insurance premiums rose because records showed consistent risk. No one argued with insurance math. They just paid. Then there was labor valuation, the most cynical ledger of all. Enslaved people were listed as assets, with values tied to age, health, and productivity. The accountant adjusted these valuations downward by hairline margins. Not enough to trigger concern, but enough to reduce collateral strength. The plantation borrowed against human lives, and now those lives were worth less on paper. Creditors tightened terms. The master blamed market uncertainty, never realizing his own books were erasing his leverage. What made the bleeding unstoppable was plausibility. Every small error had precedent. Every adjustment matched a story already believed. There were no sharp drops, no sudden losses, no obvious theft. Just erosion. And erosion is easy to ignore until the foundation cracks. As profits thinned, the master responded predictably by borrowing more and demanding higher yields. He pushed overseers harder, extended work hours, cut corners on care. Productivity rose briefly, but costs rose faster. Injuries increased. Medical expenses climbed. Replacement labor had to be purchased on paper through internal valuation changes. The accountant recorded it all faithfully wrong. Audits came and went. They focused on totals, not texture. The books balanced. Columns aligned. Nothing screamed fraud. Auditors weren't looking for a plantation committing suicide by arithmetic. They were looking for stolen cash, missing inventory, forged signatures. None existed. The plantation was dying honestly, according to its own records. By the time creditors began to ask uncomfortable questions, it was too late. To fix the books would require admitting years of misreporting. To challenge the numbers would expose contradictions no one could explain without implicating themselves. The master faced an impossible choice: trust the records or destroy them. He chose trust because systems feel safer than intuition. Meanwhile, the accountant watched patiently. He had calculated the breaking point long before. He knew when the plantation would no longer be able to service its debt without revealing the truth. He knew which season would expose the illusion. And he knew he didn't need to do anything dramatic to get there. The system was already running in his favor. The wealth didn't vanish overnight. It leaked. Quietly, respectably, in ways that allowed everyone involved to believe the problem was temporary until it wasn't. By the time the plantation realized it was bleeding out, it was surrounded by ledgers that proved, on paper, that this outcome was inevitable. This was the genius of the small errors. They didn't announce themselves. They didn't demand attention. They simply accumulated, month after month, harvest after harvest, until the plantation found itself standing on perfect paperwork and empty pockets, ruined not by rebellion, but by arithmetic that had been allowed to run just a little too far in the wrong direction. What made the operation especially dangerous was how deeply the accountant embedded himself into trust. He was not treated as an outsider or merely another enslaved laborer assigned to clerical work. He became routine, predictable, invisible in the way furniture becomes invisible inside a house. The master relied on him not because he believed him incapable of deception, but because the system itself appeared too rigid to bend. Numbers felt neutral, ledgers felt honest, and the person who maintained them faded into the background, absorbed by the authority of ink and columns. The accountant understood this psychology perfectly. He learned when to speak and when to stay silent. He never volunteered explanations unless asked, and when he was asked, he answered calmly, using the language of commerce rather than emotion. He framed every concern as protection of the plantation's future. He spoke about stability, long-term positioning, and reputation with creditors. These were words masters trusted because they mirrored their own fears. Gradually, decision-making shifted. The master still believed he was in control, but he stopped questioning the recommendations placed before him. When the accountant suggested delaying a sale to avoid market weakness, it sounded prudent. When he advised taking a loan to smooth out seasonal gaps, it sounded responsible. When he warned that certain creditors were becoming impatient, it sounded urgent. Each recommendation carried just enough logic to bypass scrutiny. What no one noticed was that the plantation's strategy was no longer reactive to reality, but to paperwork. Choices were made to satisfy the books, not the land. Crops were planted to meet projected numbers rather than soil conditions. Repairs were postponed because depreciation schedules said the buildings still had value. Human exhaustion was ignored because productivity graphs showed acceptable output. The plantation became an abstract entity, a balance sheet that demanded obedience. The accountant also controlled memory. Ledgers didn't just record events. They defined what the past looked like. If a previous year appeared profitable on paper, then any current struggle was framed as mismanagement or bad luck, not structural failure. If costs appeared historically stable, then rising expenses felt anomalous rather than inevitable. By shaping the past, he shaped how the present was interpreted. When conflict arose between overseers and management, the books became the final authority. Overseers complained about shortages, broken equipment, and declining health among workers. The accountant responded with figures showing sufficient supply purchases and maintenance allocations. The numbers contradicted lived experience, and numbers won. Overseers were disciplined, complaints quieted. The plantation grew more brittle as reality was dismissed in favor of accounting logic. Even suspicion, when it finally surfaced, had nowhere to land. The master sensed something was wrong, but couldn't identify what. Profits existed but felt hollow. Debt was manageable but endless. Expansion plans stalled despite positive reports. Every time doubt emerged, the accountant produced documentation that soothed it. Charts, comparisons, trends. Suspicion dissolved into confusion, and confusion defaulted back to trust. The brilliance and cruelty of the system was that it required participation from everyone. Creditors relied on the books. Auditors verified totals. Merchants referenced invoices. Courts accepted ledgers as evidence. The plantation was wrapped in paperwork that reinforced itself. To accuse the accountant would be to accuse the entire economic framework that validated slavery as a business. No one wanted to pull that thread. As pressure mounted, the master responded by tightening control over people rather than questioning processes. Punishments increased. Rations shrank. Workdays lengthened. These measures briefly improved output figures, which the accountant recorded faithfully. But they also accelerated decline, injury, illness, resistance, and death quietly inflated hidden costs. The plantation was eating itself to satisfy numbers that no longer represented reality. By this stage, the accountant barely needed to act. The machine ran on momentum. Decisions made years earlier locked the plantation into a narrowing corridor of options. Every attempt to recover deepened dependence on credit. Every attempt to grow expanded risk. Every attempt to cut costs reduced resilience. The books did not lie. They simply told a story that ensured no escape. What makes this moment so unsettling is that collapse was no longer dramatic. There was no single disaster, no rebellion, no fire, no failed harvest to blame. The plantation unraveled through compliance, through trust, through orderly records that proved, line by line, that everything happening was reasonable. When the end finally approached, it felt administrative rather than tragic. Meetings replaced violence. Legal notices replaced whips. Ownership transferred through signatures instead of chains. The plantation did not fall. It was repossessed, dissolved, redistributed, and the books showed that was all perfectly justified. This was the accountant's quiet power. He didn't need to steal, sabotage, or destroy. He only needed to let the system believe in itself a little too much. And by the time anyone realized that faith had been misplaced, there was no clear villain left to punish, only ledgers full of numbers that had already decided the outcome. By the time the discovery became unavoidable, the plantation was already past the point of saving itself. The collapse didn't begin with shouting or arrests or sudden violence. It began with paperwork arriving from places the master could no longer ignore. Letters from creditors stopped sounding patient. Their tone changed. Shorter sentences, firmer deadlines, less courtesy. Accounts that had once been flexible suddenly demanded exact figures. Promises that had carried weight for years no longer worked. Something had shifted in the outside world, and the plantation was exposed to it all at once. The master's first instinct was denial. He believed the books. He had trusted them for years. They showed productivity, assets, and projected recovery. So when creditors questioned solvency, he assumed exaggeration or collusion. He accused merchants of price manipulation. He blamed wartime instability. He blamed weather, transport delays, even politics. Anything except the numbers that had guided every major decision. But this time, the numbers were no longer private. They were being compared against reality by people with no emotional attachment to the plantation's survival. Formal audits followed. Not the casual inspections the accountant had navigated easily before, but full reconciliations ordered by lenders protecting their interests. These audits did not accuse anyone of fraud at first. They simply asked for clarification. Why did depreciation schedules not match physical conditions? Why did loan balances roll forward without principal reduction, despite reported profits? Why did inventory values remain stable while purchase orders showed increasing costs? Each question alone seemed manageable. Together, they formed a pattern that no amount of explanation could smooth over. The plantation's legal exposure widened quickly. Once creditors sensed weakness, they stopped acting independently. Information was shared, claims were compared, timelines were aligned. What had once been a web of separate obligations became a single tightening net. Payment defaults triggered penalty clauses buried deep in contracts the master barely remembered signing. Interest rates jumped. Collateral provisions activated. Land, equipment, and even people were suddenly listed as security rather than assets. Court involvement followed almost automatically. Ledgers were submitted as evidence, not by the accountant, but by the master himself, who still believed they would vindicate him. Instead, they sealed the plantation's fate. Judges and clerks saw not resistance, but admission. The records showed a pattern of dependence on credit masked by optimistic projections. They showed delayed payments justified by future harvests that never fully materialized. They showed a business operating on momentum rather than solvency. Legally, intent didn't matter. Outcomes did. The master lost control in stages. First came restrictions, limitations on borrowing, requirements for oversight, mandated reporting. Then came enforcement, seizure of movable assets, appointment of trustees, forced liquidation of non-essential property. Each step felt temporary to him, a pause before recovery. But each step narrowed his options further. He was no longer managing decline, he was administering it. For the enslaved people on the plantation, the collapse felt sudden but confusing. Work continued, but ownership became uncertain. Overseers were replaced or dismissed. Supplies grew erratic. Rumors spread faster than facts. Some were sold off quietly to satisfy debts. Others were held in limbo as legal ownership shifted between parties. Families were separated not by cruelty alone, but by clauses and court orders. The violence was bureaucratic, but no less real. What made the collapse especially devastating was how clean it appeared on paper. There was no accusation of rebellion or misconduct severe enough to rally sympathy. No disaster dramatic enough to inspire aid. From the outside, it looked like an ordinary business failure. A plantation that expanded too aggressively. A master who trusted projections too much. A victim of market forces. This framing erased responsibility while preserving the system that caused the harm. The accountant, at this stage, was almost irrelevant to proceedings. He was not charged, questioned aggressively, or publicly blamed. His role dissolved into anonymity as institutions took over. Courts didn't care who shaped the numbers, only that the numbers justified action. Creditors didn't care how the books came to be, only that they supported claims. The system consumed itself without needing a villain. Eventually, the plantation ceased to exist as a unified entity. Land parcels were auctioned, equipment reassigned, contracts voided or transferred. What had once been a functioning operation became a set of case files and receipts. The master's authority evaporated not through confrontation, but through signatures made by others. He watched decisions happen around him rather than through him, stunned by how quickly power vanished once financial credibility collapsed. The most unsettling part is how inevitable it all seemed in hindsight. Every step followed logically from the last. Every consequence was supported by documentation. There was no moment where someone could point and say, "Here is where it all went wrong." The collapse was cumulative, distributed across years of reasonable decisions, guided by records that appeared sound. The plantation wasn't destroyed by chaos, it was dismantled by order. When it was over, there was nothing left to argue. The books had spoken, and the law had agreed. The plantation did not fall in a blaze of rebellion or scandal. It ended quietly, absorbed into legal processes that treated human suffering as line items and closure as resolution. And somewhere in that silence, the true power of the accountant's work became clear. He hadn't just brought down a plantation, he had shown how fragile the entire structure was once its own rules were followed to the end. After the plantation dissolved, there was no dramatic reckoning for the man known as the accountant. No public trial, no recorded punishment, no clear reward. His disappearance from the historical record is not an accident. It is the most revealing part of the story. Systems built on paperwork rarely know what to do with the people who understand them better than anyone else. Once the ledgers had served their final purpose, the man who kept them became unnecessary, and in that sense, invisible again. In the immediate aftermath, control of the property passed fully into legal hands. Trustees and court-appointed managers took over what little remained. They were concerned with assets, liabilities, and settlements, not with tracing how the books had come to shape the collapse. The accountant was listed in inventories the same way he had always been, as labor, as property, as an entry rather than a person. No one asked him to explain the logic behind the records. No one accused him of manipulation. The system did not recognize subversion when it was carried out using its own language. Witness accounts from nearby plantations suggest he was transferred quietly, bundled into a group reassigned to satisfy outstanding debts. This was common practice. People were moved like furniture, redistributed to make balance sheets close. If he went with them, he would have arrived at a new place carrying a reputation that worked both for and against him. He was known as skilled, literate, reliable, valuable traits. But he was also associated with failure, with financial ruin, with a plantation that no longer existed. Masters valued competence, but they feared competence that they didn't fully control. If he continued working with numbers, it would have been under tighter supervision. Some owners used such men cautiously, allowing them to calculate totals or copy figures without granting full oversight. Others avoided them altogether, choosing ignorance over risk. Literacy was a double-edged sword in slavery, prized when profitable, punished when threatening. The accountant would have understood this better than anyone. Survival now meant shrinking himself, dulling his sharpness, becoming smaller than his abilities. There is also the strong possibility that he deliberately erased himself. Once the plantation fell, the ledgers that mattered were no longer his to keep. His greatest weapon, long-term continuity, was gone. Starting again elsewhere would require patience and restraint. He would have needed to appear ordinary, unremarkable, obedient. Any hint of cleverness could draw attention, and attention was dangerous. For someone who had learned the power of being unseen, anonymity may have been the safest refuge. What is striking is that no records contradict this silence. No runaway notices bearing his description. No punishment logs naming him. No sale advertisements highlighting his bookkeeping skills. This absence suggests intention, not coincidence. People who caused problems usually left traces, accusations, rumors, warnings. He left nothing. He slipped back into the margins, where enslaved people were meant to remain, carrying knowledge that no longer needed to be expressed. Yet his impact did not disappear with him. The plantation's collapse circulated quietly among neighboring owners and financiers. It became a cautionary tale. Stripped of names and details, masters spoke vaguely about overexpansion, about trusting projections too much, about the dangers of debt. They did not speak about the man who kept the books. Blaming abstractions felt safer than acknowledging that someone they enslaved had understood their world better than they did. In this way, the accountant's legacy lived on without attribution. Practices changed. Oversight tightened. Some plantations divided accounting tasks to prevent any one person from holding the whole picture. Others reduced reliance on projections and insisted on physical inspections. None of these changes questioned the morality of the system, only its efficiency. But they revealed fear. Fear that order itself could be turned inward and made destructive. There is a quiet power in knowing that he was never caught. Not because he escaped justice, but because justice, as defined by that world, had no language for what he did. He did not steal, he did not sabotage. He did not lie in ways that could be isolated. He followed rules, honored formats, and produced records that aligned with accepted practices. To punish him would have required admitting that the system's own logic was flawed. That slavery as a business depended on illusions it could not survive without. Whether he lived to see emancipation is unknown. Whether he ever touched a ledger again is unknown. Whether he spoke of what he had done to anyone is unknown. But the absence of answers is itself meaningful. History often preserves the names of those who break rules loudly. It rarely preserves the names of those who let rules finish their work. The man called the accountant did not need recognition. His goal was never to be remembered. His goal was to make something impossible to ignore happen quietly, inevitably, without spectacle. And when it was done, he stepped back into the shadows where enslaved people had always been forced to live, leaving behind nothing but a trail of numbers that proved a simple, devastating truth. The system collapsed not because it was attacked, but because it was allowed to function exactly as designed. In that sense, his final act was disappearance. Not as defeat, but as completion. The plantation was gone. The books were closed. And the person who had written the ending no longer needed to be seen.